Well, trading volumes are so light on the stock exchange, it's clear nobody's interested in investing at the moment. In fact, I wouldn't mind betting that most of the trading that's being done is by computers, whirring away in basements, picking up micro-cents, like seagulls picking up chips at the beach. Ask anyone what's going to happen to share prices and they'll tell you to ask them next week, after the European summit has broken up and the leaders have announced their latest excellent plan. Today the All Ords fell 1/3%. Most of the banks fell, but NAB went up. And the two big gas companies, Woodside and Santos, were sold off. I don't know why. Global markets were pretty listless as well, although there was a pretty hefty fall in India this afternoon. Commodities were weak today, although the oil price is still above $100 a barrel. And the poor old Aussie dollar is like a puppet on a string. It was doing quite well, but then fell 0.5 cent at 11:30 on the news that employment had unexpectedly fallen in November and the unemployment rate went up to 5.3%, although it's still trading higher than it was this time last night. Basically, there's no conviction one way or the other about the future direction of interest rates in Australia. Here's a chart I picked out from the employment report. It shows total employment and the total number of hours worked, rebased to 100 at January 2007. Now note there are two periods of flat employment, during the GFC in 2008-09 and the past 12 months. During the first one of those, hours fell sharply, while this year hours are actually going up. And finally, a stunning chart to finish with. Growth in US credit or borrowing since the recession began in the US. Now, for governments, federal, state and municipal, it's quadrupled. For everyone else, debt has declined. And that's finance.